What's going on, everybody? It's Kevin here from Stock Hours, and today I'm going to be showing you guys one secret tip that's going to help you boost your win rate a lot more when you're taking trades. Alrighty, so I know you guys are wondering now, what is the secret tip that's going to help boost our win rate? The secret tip that's going to help boost your win rate is something that we call market divergence. And pretty much what you're doing is just comparing the stock to the overall market to see if it's performing better than the market, worse than the market, or even just doing its own thing. And there's two things that you really need to pay attention to when it comes to market divergence. The first one being market structure, and the second one being candlesticks. We'll get into this in a second. So I want to go over three quick things right here. So over here on the left side, we have SPY and QQQ, which is basically the market. And then over here, we have the stock. For example, we could use Nvidia, Meta, Apple, AMD, whatever it is that you guys want to use, right? So over here on the left side, you can see that SPY is showing choppy price action, showing that consolidation. Over here, we have an uptrend on SPY. And right over here, we have a push up, we have a consolidation period, and then we push up again. Right over here on the stock side, we can see while the market is consolidating, the stock is making higher highs, higher lows, higher highs, higher lows, which is telling us that the stock that we're trading is stronger than the overall market. In the second example right here, side-by-side comparison, while the market is trending to the upside, X stock is trending towards the downside, meaning that this stock is doing its own thing. Over here, this last example, we have SPY make a push up, pull back, consolidate, and then make another move up. Over here on the stock, we just have higher high, higher low, higher high, higher low, higher high, with zero consolidation, telling us that the stock that we're trading, in comparison to the market, is a lot stronger. Alright, so how can we use market divergence to help us? I'm going to find a couple examples of market divergence where you can use it to your advantage to take trades. But just really quickly to list, there's three key forms of market divergence. The first one being the stock is stronger than the overall market, the stock is weaker than the overall market, and that the stock is doing its own thing in comparison to the market. So let's just get right on with this. Alright, so over here I have Meta pulled up, and basically what I'm looking to do on this trade is to play the breakout of 584 to the downside. Now, in order for me to take this trade with full confidence, I need to see Meta being weaker than the overall market in order to take a trade. So if we play this trade out, right, we can see over here that while the market is dropping, Meta is dropping as well. So no signs of market divergence there yet. Let's just keep playing this trade out. And you can see right over here, QQQ, or the overall market, begins to have an aggressive bounce. But if you look over here on the right side on Meta, while the market is bouncing, you could literally see each individual candle and how it moves with my cursor following along with it. But you can see while we get this aggressive bounce from the market, Meta is still dropping to the downside, right? So this is telling us that Meta is a lot weaker than the overall market. And like we said earlier, the two most important aspects of market divergence is the market structure and how each candlestick moves, right? So if we look at the left side over here, we have the market making a drop and then an aggressive push to the upside. While over here on Meta, the second we opened, we just pretty much had a straight drop down. And as you guys can see, Meta continuously breaks low of day every single push. But if we compare it to the left side, the market hasn't even broken low of day yet. So you may be asking, how can I use this to my advantage, right? And the way we can use this to our advantage is that if Meta comes all the way down to 584 and the weakness stays like this while the market's doing whatever it wants to do, any push down from the market is going to help Meta push all the way down. And the reason being is because the stock is listed in the NASDAQ or the S&P 500, any sort of move from the market is going to impact the stock, right? So let's keep playing this trade out, right? You guys see that we have an aggressive push to break low of day from the market, and Meta aggressively drops down, right? So right over here is when I would be getting ready for puts, right? We have a bounce from the market, and Meta still has a red candle. Play this out. Bounce from the market, slight bounce on Meta, and then just keep playing this through. While the market's still pushing up, Meta broke low of day again, right? So ideally, I would have taken my entry on the low of day break here, and then as we play this out, you'll notice that Meta weakness still continues throughout this trade, and that you were able to secure a decent percentage profit on this trade. Just to go in a little bit more in depth here, let's just take a look at the entry candle that we have right here, right? Big push to the downside, and over here from the market, we have a push to the upside. Next candle over here, push to the upside. Next candle over here, big green candle from the market, but look at what Meta did. It kept its weakness, right? And as Meta keeps its weakness, whenever the market had its red candle, which you can see right here, Meta broke low of day. So this is one of the ways you guys can identify market divergence and use it to your advantage. All right, here's another example. And this example right here is basically going to be showing you the key level breakout of 131 on Nvidia and how it moves in comparison to the overall market. Now I'm going to tell you guys right now that this example is an example of how the stock can move on its own while the market itself is making its own moves. That itself is also another form of divergence. So if we play this trade out, let's just watch. Okay. So ideally you could have taken an entry right here at 131. And just to keep playing it out, you can see that we do get stopped out on this trade, assuming that you had your stop loss somewhere around here, or you had a 10%, whatever it is. But you guys can see, market is consolidating, Nvidia is consolidating, right? So this is basically telling us that we have the same market structure for now. And if we keep playing this trade out, Nvidia continues to consolidate while the market keeps breaking high of day. Nvidia is still in the range between low of day and high of day, which is telling us that A, Nvidia could be weaker than the overall market, or B, Nvidia is doing its own thing. And if we keep playing this trade out, you can tell that Nvidia is doing its own thing, right? So at this point, when you're taking this trade, it's going to be important to know that since Nvidia is doing its own thing, it's not going to be following the market. So even if the market continues to push up and then suddenly pulls back aggressively, there's a strong chance that Nvidia won't have as strong as a pullback as the market. So if we continue to play this back, Nvidia finally broke high today while the market's pushing. And you can see right here, when the market pulls back, Nvidia actually has a strong green candle. And if we keep playing this out, you guys can see that Nvidia keeps doing its own thing for probably majority of the day, right? We continuously to have these big pushes up towards the upside, and then we pull back, we consolidate, and then basically same story here, kind of just struggling to make higher highs over here for the rest of the morning. And then you guys can see right here, while the market's consolidating a little bit, Nvidia has an aggressive dump to the downside, right? So this is an example of Nvidia doing its own thing compared to the market. All right, so this is the last example I'm going to show you guys, which is the last type of divergence. It's when the stock that you're trading is a lot stronger and is ahead of the market, right? In this example, I'm going to be using Meta. It's an all-time high break, and I'm just going to play it out, and I'm just going to go through the in-depth analysis of how this trade played out. Right, so boom, played the all-time high break, and if we compare side by side, you guys can see that Meta's actually continuing to make these all-time highs, while the market just had an extreme sell-off, right? So when you see this, this is telling you that your stock is super strong, and any green candle or slight bounce from the market is going to send Meta to the upside. I'm also going to show you guys a couple examples of market divergence between individual candlesticks. This is super simple and easy to read. It's literally just comparing the candle from the market and comparing the candle to the stock that you're trading. Right, so let's just take a look over here on Meta and QQQ. So since we already know that Meta is overall strong, we're basically going to be trying to see if we can get any green flags from the market that can push Meta back up to the upside, right? And some green flags here is this candle right here. You guys can see that this candle is pretty much flat, but look what happened on Meta. A super strong big green candle. This is also another example. This candle right here, it's a flat red candle. But what do we have here on Meta? A big strong green candle. So this is telling you that Meta right here is a lot stronger than the market because we have a big green candle while the market has a red candle. So if the market were to have a big green candle, Meta would also have a big green candle to the upside, which would make your trade a lot more high probability. And as you guys can see on this next candle, QQQ opened up right around here, made a push to the upside, and what happened on Meta? Push to the upside, right? So this is how you guys can use market divergence to your advantage when you're taking trades. This applies for breakouts, bounces and rejections, whatever it is that you want to trade. This is an amazing confirmation tool for you guys to use when you're getting into trades. And I hope you guys learned a lot from this video. If you enjoyed, make sure to like, comment, and subscribe to the Stock Hours YouTube channel. I'll see you guys in the next one. Peace.